Best predictor of success, innate ability to allocate time properly. Keith Rabois. My friends, allocating time properly, that is giving yourself 10 to 15 minutes each and every day to track the markets and to practice trade, is extremely important. If you will do that, if you will just dedicate that time, don't worry about how long it takes. I say this over and over. Once you master the markets, you will make up for all the time you ever spent. As I look at the markets today, everything is up. And again, this latest turnaround where we jumped in, particularly on the NASDAQ 100, and have been riding it up, it's up 1.31% today alone. Makes you feel like a genius when the market's going up, 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 up. It's easy to make money when that happens, but let me tell you what is coming. Everything that goes up must come down. And when it starts to roll over, if you have not been spending your time each and every day practice trading, learning by doing, following the charts, studying, doing all the things we talk about on a daily basis, when the rug is pulled out from under the market, after the exuberance, and again, when people start getting fat, dumb, and happy, and they believe the market's going up forever and ever and ever, that is about the time that the rug is pulled out from under everyone, when everyone buys in to either everything being so bad it'll never recover or so good that it'll never go down. You know that it's coming. I've been doing this long enough. I know that it's coming when I hear that everything is so good and it's going to be good forever. Man, they are setting you up. So again, I don't know if it's tomorrow. I don't know if it's 2 years from now. But I can tell you, when everybody thinks it'll never go down, it's getting ready to go down. When everybody thinks it's never going to go up, it's getting ready to go up. And it has been going up, 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 up. It will end someday. When it does, we will be here watching it. We will see it. We will talk about it. And you will need to have that knowledge banked so that you can make the right decisions in your life for yourself and for your family. So please, 10 to 15 minutes each and every day. We do this for you as a service. Nobody charges you for this. We appreciate the Patreon members and their support, and we make it very much worth their while with the trainings we give them throughout the week. So again, if you want to support us, great. If you don't want to support us, that's fine. Just do the practice. Let's jump into these charts. As I said, everything's up for the day. S&P 500 up 0.82%. You can see here we're reaching a higher high for the week. You can look at the latest 2-day candle. And again, that's just for today, okay? This is the first day of the latest 2-day candle. It's a booming up. We look at the half day. You can see where things popped up in the morning, shaved a little off in the afternoon, but an exuberant day for the S&P. Prices above the weekly trend line on every single chart. What about the Qs? Up 1.31%, as I said earlier. Higher high. Look at that 2-day candle up in the morning, a little further up, even in the afternoon on the NASDAQ. So again, things with the tech stocks going great. How long will it go great? I don't know. Looks outstanding right now. We jumped into this trade again. Why? Because we had the telltale signs of a weekly vertical crossover that would work. We had a red down candle with high or average volume. We then had a green spinning top with high or average here, average volume. And again, that is, does it always work? Not 100% of the time, but over and over and over again, we see it paying off if we pay attention. And why would I jump into trades when I don't have things that invariably work for me? And then what do I do to take some profit and to let things run? Well, that's why we use something like the average true range. Many times, that is on the 2-day chart. Many times, even when you jump into a position that turns over that doesn't last long. Doing one time the average true range and selling half your position sets you up to let the remainder of that trade run, or if it dies, pull out and then not lose all the profit that you already took. That's what we do. That's why we set it up the way we set it up, to allow the other half of the trade to run for as long as it will run, to whatever kind of criteria you set up for letting it continue to play out. Again, my friends, we do this for a reason. We practiced this for years. We've had, I don't know, thousands of folks, students that have come and studied with us over the years and have found what we do works for them. Now, we're not a stock calling service, not giving you trading and investment advice. We're asking you to practice trade with us. Prove things to yourself. Take what works for you and add all the rest of your trainings, knowledge, books, charts, studies, videos, classes, seminars, everything you've done, add it to it. And again, develop your own nuances, your own style, things that work for you. But when it works, use it. When it doesn't, exclude it. Let's look at where we are on 20-year bonds. Now, again, we saw things this last week get up to average, just barely touching on the right-hand side of the volume. And I was hoping that that was going to be a topper as the week started off, but it looks like we're going a little higher. So again, we're not up to the average volume yet and may make it by the end of the week. Did we have anything to tell us this was going to occur as far as volume helps us? No, we really did not. You look at the volume here on the 2-day chart, below average. So again, bonds looks like they may be going a little higher. Great, that's fine. We didn't have any telltale signs to pull us into this trade, and we're letting that run. It's up for the day, 0.75%. Let's look at gold, which is currently, again, in a downtrend. We do see a green candle forming here. Now, this could turn red tomorrow, but you see in the morning things popped up, leveled off some in the afternoon. Gold was only up 0.27%. So we'll see how this candle finishes drawing. Will it be red by tomorrow? Will it stay green? Does it mean that anything is changing? I've been telling you here lately, because again, we're always looking for things that help us when we're looking. And I have just found that here lately, gold miners has just been a better than gold for trading on gold. We saw a great turnaround signal here back in late February, and then where things turned around in March, much better than anything we saw on gold. And of course, what have we seen here? Well, we had average volume with the interim peak, and then of course a turnaround with a green spinning top last week with higher than average volume. This was, again, just a doji. But as we saw things start moving down, of course, that gave us an opening to short gold miners. Now, does that mean that gold itself is going to keep going down? Hell, I don't know. But again, when I find a chart that's working, and again, charts work until they don't. And when charts stop working, then of course you move on to another chart. Now, we don't do that here. We have for years followed the S&P 500, NASDAQ 100, 20-year bonds and gold. We added, because you requested it, Bitcoin into the mix a few years ago now. And again, I wasn't excited about doing that, but you guys pushed us to do it, and we started doing it. And we're looking, as Bitcoin matures, I think we're going to find charts that work more and more. These charts have worked on and off for us for years. The big four, that is 20-year U.S. government bonds, gold, Bitcoin, gold, S&P 500, and NASDAQ 100. All those we have used for years. Now, what do we see going on with gold? Well, it's struggling. We'll see if it continues down or if it's going to, again, have an interim low and then move back up again. We do have a ceiling here. It's already bounced off twice. And of course, we saw that happening this last time, and we are still in that down move. Let's look at what's up lastly. Last chart to look at is HODL. What do we see going on there? Well, As we look, it's basically flat. 0.03%, 0.3% for the day. We have a doji. Now, we saw for, 2.5 days, we saw Bitcoin moving down, popped up in the morning, and then lost it in the afternoon and pushed back below on this half-day chart, back below the weekly trend line. You can see the 2-day candle is below the weekly trend line. You can see on the weekly chart, the weekly candle is a doji right now, showing lots of indecision. It's just barely a red doji. So we will keep an eye on things and see how they continue to develop. Will Bitcoin get a bit of a kick? Is it just digesting the prior week's gains and will take off again? Don't know. We shall wait. We shall see, and the charts shall determine the direction in which we go. As always, doesn't matter what you feel. It matters what the charts are telling you. Sometimes they tell you nothing. So guess what you do? You do nothing. But if the charts are telling you to trade, then you jump into your practice trade and you learn by doing. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters. By the way, Patreon members, I recorded for you yesterday the 3-wave trades and the charting cryptos, commodities, and currencies. I'm going to be posting those in a few minutes at the Patreon site. And of course, we always email all that out to you on Thursday. God bless, all the best.